We have the management of Tata Chemicals, R Mukundan, Managing Director and CEO Tata Chemicals, joining us.
Good afternoon.
Right.
Well, yes, that's about Tata Chemicals.
Yeah.
Tata Chemicals did come out with its earnings this time around, where we have seen some bit of a pressure coming in onto the number front. But let's understand more that what were the factors that actually helped the numbers this time around. Hi, very good afternoon. This is Shrishti joining in. First of all, a decent set coming in for the company. Tell us more. What were the factors that were at play for the company this time around? How were the numbers panning out, and what is the outlook for the margins going ahead?
Yeah, in terms of the numbers itself, Shruti, I think we had what I would say the normal run of the market, but really because of the pressure in margins in European market, we had to take a one-time write-down of our European assets of about 900 crores, which has resulted in a non-cash charge. Other than the non-cash charge, the units have performed to our expectation. The market is fairly balanced. In terms of the European market continues to be under pressure. Indian market is growing, especially we've seen the chemical sector and the detergent sector having strong growth. The American market, the economy is performing well, but we are also watchful of the situation, the geopolitical situation, as well as the Chinese market, because that plays into a large amount of the pricing and volume numbers. But overall, we are fully sold out this year, at least for the first 3 quarters, I can say with a lot of assurance because of contracts in hand. And it's largely up to the pricing move. While it has bottomed out, we are all looking towards when it will start to trend upwards. Uh, it has been a little longer than what we thought. Also, you see, as the interest rate readjustment starts to happen, we believe that the uptick will start to happen in most markets. However, the market most under stress is Europe, which is what has caused the one-time write-down of almost about 960 odd crores.
Right, Mr. Mukundan, we did see the weakness in Q4 amid the pricing pressure on soda ash across geographies. What could be the outlook ahead for the soda ash demand in India and the overall industry?
Well, in terms of the numbers, when you take the EBITDA number quarter on quarter, there may be some reduction. But in terms of volumes, actually, the Indian market sequentially, as well as the US market sequentially, has done significantly better than last quarter. Of course, there's been a slight amount of margin pressure in India, but this is only temporary, and I think we will be able to get back to normal margins going forward. So really, our view would be that the market is bottomed out. It is going to trend up in our main business. As far as the second largest business we have, salt, it is continuing to perform very strongly in both India and in UK. And all other products are on a good even keel. Our subsidiary Rallis has done well in the Indian domestic market, albeit some pressure in the international market, which also our belief is it's at the bottom of the curve as we speak.
Okay, Mukundan, Mr. Mukundan, just wanted to have your view and more details rather on the write-off done in the UK plant.
This is a accounting testing which we do every year, and the underlying asset and its ability to generate cash flows, and it's in that basis being done as a non-cash charge. Uh, as if markets improve, this can move either way. So, as I mentioned, the European markets have been most under stress, and the energy prices in Europe are almost 3 times what they were pre the unfortunate war in Europe. So we do think that it'll take a bit more time to correct itself, which is what we thought it was prudent to do what we've done. Apart from the one-time charge, I think all of the financial metrics are as we had expected. And going forward, this quarter, we will be commissioning almost a 250,000 ton capacity in soda ash in India and another 200,000 tons of salt during the year. And pharmaceutical salt will get commissioned. Part of it will be pharmaceutical salt, which will get commissioned in the UK of about 70 or 1,000 ton. So the growth projections which we had in the project execution we had, that is on schedule. Uh, the fundamental point being, while the world market is at the bottom and is flat, we do think that it start to trend up. However, Europe would probably take much longer than what we thought in terms of improvement, and that's why we've taken the charge as we've seen in those days.
Right, Mr. Mukundan, also give us an outlook on the China dumping of soda ash.
Actually, the issue is not so much from China. The material actually is coming in large volumes from Turkey. As you know, Turkey used to have a large market in Europe, and that market, as I was mentioning, has collapsed by about 1 million ton out of 6.5 million ton, and that has led to a lot of that material landing up in India, close to about 500,000 ton. And so, really, what you're seeing in Indian market also is a reflection of what has happened in the European market, and I think in general, the bearish trends in Europe are continuing. They're also at the bottom, but I think they are. It is probably at a bearish levels, which is going to take much longer than all other markets. If you look at general economic conditions, India and US are fine. Europe is under stress. Africa is doing fine, and so is Latin America. Broadly, that's the trend we see.
All right, Mr. Mukundan, just before we let you go, just wanted to have a word on the earnings outlook as well, because some of these brokerages are highlighting that the earnings seem to be likely remain under pressure or near the current run rates through the most of FY25. So, as we step into FY25, can we expect some better earnings, or the earnings growth could be the current run rate on itself?
So, as I mentioned, if you look at it, the bulk of the earnings momentum will come from volume increase, which will happen during the year. And we are more or less sold out for first 3 quarters. The real issue is whether pricing improves towards Q4, which is when we go for fresh contracts. We hope if the situation in Europe improves by then, I think the conditions will be far better during the year.
All right, with this, Mr. Mukundan, we'll let you go on that. Thank you so much for joining us today on ET Now.
If you like this video, then like, share and subscribe to ET Now.